All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Wednesday, everybody. Today is August 27th, 2025, and it is Nvidia Day. Nvidia's earnings are after the closing bell today. And well, the entire freaking world is holding its breath on this earnings report, which has become basically the single most important financial event of the entire quarter. It's more important than CPI inflation readings. It's more important than jobs numbers. It's more important than GDP. It's more important than any other corporate earnings call. It is the singular financial event which will dictate the course of pretty much every asset class across the board. And so what do we have going on this morning? Well, first of all, just think about this for a second. The Mag 7 stocks now account for about 34% of the S&P 500 market cap. More than a third is just 7 stocks. So the S&P 493, and then you've got the Mag 7. And of course, Nvidia will dictate the direction in which the entire Mag 7 goes, because all of the Mag 7, except for maybe Apple, all of the Mag 7 are going up and down based on this AI bubble. And so where is the AI bubble? What is the state of the AI bubble? It is somewhat unchanged from where we were a quarter ago, right? Big Tech Capex has not slowed. It's actually increased. Namely, we had Google and we had Meta increased their CapEx. Microsoft has stalled. They haven't grown their CapEx, but they have kind of hinted that there may be cuts in the future, but they still haven't cut it yet. And so the hyperscalers are still hyperscaling. So that's a big one. Now, the question is, all of that big CapEx, how much of that is flowing through to Nvidia chips? Because we know the Mag 7, we know the hyperscalers are now up against power problems. We saw that with this PJM grid auction a few weeks ago that saw the highest capacity prices ever. And even those numbers were fake because last year the capacity prices went up so much that PJM put price caps in place. And this year the prices went right to that price cap and stopped. So we don't even know how high power prices would really go if we weren't using price controls, which, by the way, eventually leads to shortages because it blocks market signals. So the power problems have crept to the forefront of this AI build-out now. So how much of this big tech CapEx is going to things like the deal Microsoft cut for 3 Mile Island, or the deal that Meta cut for Clinton Power Station? Or how many of these big tech companies are building power plants instead of just pumping the money into Nvidia chips? We don't know how much yet. It's a growing number for sure. Microsoft CEO said earlier this year that he's now more power constrained versus chip constrained, but the CapEx is still flowing. And we also had a pretty crazy data point earlier this week on my live stream on Monday. We saw this article in Bloomberg about private credit is now getting in on the data center boom. And they mentioned $50 billion per quarter from private credit is now being spent on data center build out. Now, that's interesting because that also means that garbage is probably bound for your 401k, which means your retirement plan is investing on these data centers that are probably all going to go bust at some point. But that $50 billion a quarter, again, see earlier discussion, how much is power versus how much is chips. But it's a pretty good bet. About a third of that is making its way into Nvidia's earnings in the form of these chips. So, there is a strong bull case for Nvidia here. The CapEx spend, they are still incinerating ungodly amounts of capital on these data centers. Now, the flip side to that is concerns about China. The H20, the back and forth, on again, off again bans on Chinese sales. The question of the illegal sales into China, which there's been a little bit more of a spotlight on that over the last few months. Did that take a chunk out of that fake Chinese sales via Singapore and Malaysia? Question mark. Did the H20, did all that change? Nvidia took, what was it, a $5.5 billion hit in their last earnings call over the H20. Is that going to change this time around? Big question mark. And then, of course, the other question is, of course, these ridiculously high expectations. Just beating is not enough. They're going to beat. They have to beat. but they have to beat by a very big margin. If it's just like, well, okay, they beat a little bit, the stock could crater on that because the expectations are so ridiculously high. And so, look, at the end of the day, my position here is unchanged in that I have no position. I'm not going to buy into this hype because it's fake. It's built on accounting fraud and silly gimmicks and illegal sales to China. It could blow at any minute. But at the same time, I am not going to stand in front of that train and bet my life it's going to stop. And so I'm not shorting it either. I have no position. I am very much in wait and see mode. We'll find out after the bell, guys. Tomorrow morning, we'll be talking about it more, but that will be the biggest event of the day. Now, other big news we got today, we got the European Union is scrambling to codify into law cuts to tariffs on U.S., or I should say the elimination of tariffs on U.S. imports. Now, this is a move to appease President Trump, who has demanded this. These cuts to the tariffs were part of the trade deal, not a trade deal that we cut with Europe a few weeks ago. The U.S. has said before we lower the tariffs on those European autos, we want to see your tariff cuts codified into law. And so the European Union is scrambling to do that right now. That's all about convincing us to lower those tariffs on, again, European autos. Look, Germany is in a recession. You've got France is in a budget crisis. Europe needs this trade war thing to go away. They need to put it behind them. There are still questions that remain here in this trade war about how much pain is going to result from it and who is going to feel that pain. Now, we had that PPI number last week that kind of gave everybody a scare. Obviously, there are price increases coming down the road. We don't know how much. We don't know who's going to eat it. But that being said, all that big question of how much pain and by whom, you have to admit, Trump is getting what he wants here from pretty much everybody except the Chinese and the Indians right now. And even the Indians have kind of started to acquiesce. His demands are being met because the rest of the world is realizing they need America's store shelves more than we need their cheap crap. It's important. That's a big deal. And don't expect these partisan hacks in the media who invented the term taco to ever admit that President Trump is winning, I use that term loosely, this war of economic attrition that is happening here. Nobody really wins a war of attrition, but we are losing less. You'll never get those partisan hacks in the financial press to admit that, because what they're not going to tell you is they are every bit as childish and as petty as President Trump is. But that's worth saying. He deserves credit for that. He's getting what he wants. Also going on in the tariff front, we've got Indian exporters are crying out for support from their government after President Trump doubled the tariffs on India to 50% over their refusal to stop importing cheap Russian crude in an effort to put pressure economically on Russia to get them to the peace table over the war in Ukraine. Those 50% tariffs on Indian goods are effectively an embargo, and it is killing Indian exporters. And so they're cutting jobs and they're demanding the government give them some form of support to keep them from going out of business. And we got another article also in Bloomberg this morning talking about Russian crude exports. They're down about 18% over the last few weeks because those Indian exporters, despite the Indian government kind of planting its feet and refusing to negotiate, not taking calls, whatever, Indian exporters are buying less Russian crude. So the pressure is working to a certain extent. And also Ukrainian drone strikes are taking a big chunk out of Russian exports. That is putting some pressure on the Russians economically. But then again, getting into a war of attrition with the Russians historically has not gone so well for, well, anybody. So is this going to dissuade Putin? Probably not, although it is putting more pressure on him. We also got United Health is back in the news this morning. The criminal probe is apparently broader than just Medicare fraud. Now they're looking at their pharmacy benefits manager, Optum RX. They're getting looked at in this criminal probe. More problems for United Health. We've got President Trump cut $175 million from the never-ending boondoggle that is California's high-speed rail bridge to nowhere project. Cracker Barrel did a 180, and they have reversed their silly rebrand that got some people very upset. And the stock is ripping on that. How'd you like to be the marketing girl who, when your idea gets canned, the stock goes up about $75 billion? How's that look on the resume? Yikes. We got Kohl's earnings. Kohl's earnings beat, air quotes. It was a pretty good earnings report from Kohl's, or at least it was not as catastrophic as the market was afraid of. That stock is up big after beating very low expectations, but we're still seeing significant sales declines at Kohl's. My gut tells me that is a dead cat bounce. And the money supply. We got our M2 money supply reading yesterday, and it is at an all-time high, taking out the prior peak from 2022. Basically, private credit expansion has totally overcome all Fed QT, and there is more money sloshing around in the system than ever before. Lo and behold, the money flows first in the asset prices, and, well, we're looking at pretty much every asset class across the board is at an all-time high. That's not surprising because they are still printing money. Even if it's not the Fed that's doing it, it's the banks, it's the private credit that's doing it. And we're all sitting here talking about easing, about lowering interest rates, about making it easier to lend money into existence. Don't be surprised when the inflation makes a comeback. Guys, we got a lot to talk about this morning. How about we shrink my big melon of a head? Let's see what's going on in the market. Don't forget all that algorithmic, wonderful stuff like the like button and the subscribe button for you new guys. Come on back tomorrow. Have your coffee with the melon heads because we do this every day. And right now, the S&P 500 is down a modest 2.5 points, 0.04% lower. It's going a whole bunch of nowhere here, guys. We're going to wait on Nvidia. That's the market wants to see if this AI bubble is going to blow for another 3 months, or will the groundhog see a shadow and the bubble will pop. That's what it comes down to. The Dow is higher by a fraction of 1 point, basically unchanged on the day. And the NASDAQ is down 26 points, 0.11% lower. Stocks are going a whole bunch of nowhere this morning. Meanwhile, the U.S. dollar is a little bit higher here, 98.57. That's up by 32 basis points. That's going to put a little bit of downward pressure on asset prices this morning. Bond market, we've got yields a little higher on the long end and lower on the short end. The 30-year Treasury is at 4.949. That's higher by 4 points this morning. The 10-year is at 4.279. That's about 2.5 points higher. The 2-year, meanwhile, is up just a half a point here, 3.650. And the 1 month is even up a half a point at 4.320. Looking over at commodities, spot gold is lower by $11, $3,383 for spot gold. That's off by 1/3%. Spot silver is also down this morning, $38.32. That's down by about 29 cents or 0.75%, but I still like the shiny, as some of you may have already guessed. Copper is down by 1.6%. Platinum is down by 0.8%. Palladium is down 0.4%. It's a bad day for metals, but we do have crude oils a little bit higher here, 22 cents or 1/3% higher for WTI crude, 63.47 for those October futures. Looking over at Bitcoin, it's looking a little better than it was yesterday. Emphasis a little, not by much. $111,096 is priced on Coinbase. That's showing down about 600, maybe $700 from the highs of yesterday. Still hovering right around this 110,000 range. The whales selling, that continues to dominate the story for Bitcoin. So we'll see. Will retail buying overwhelm the whales dumping, or has Bitcoin seen its high of 124,000 for this cycle? We are getting dangerously close to Bitcoin winter here, or crypto winter, I should say, which typically starts 18 months after a halving cycle, which would put us sometime around the end of September, beginning of October. All right. Meanwhile, we got a lot of tariff news today. First, what's the taco equivalent of the EU chickening out? The EU ACO, the UCO trade, is that what this is? EU to propose removing U.S. tariffs this week to meet Trump demand. The European Union will seek to fast-track legislation by the end of the week to remove all tariffs on U.S. industrial goods, a demand made by President Donald Trump before the U.S. will lower its duties on the bloc's automobile exports. The European Commission, which handles trade matters for the EU, will also give preferential tariff rates on certain seafood and agricultural goods, according to people familiar with the matter. The EU has conceded that the trade arrangement struck with Trump favors the U.S., but that the accord is necessary to give business stability and certainty. Commission President Ursula von der Leyen previously described it as a strong, if not perfect, deal. The move comes even as Trump has threatened to impose tariffs and other penalties on countries that tax online services without specifying which nations he would target and whether the EU would be involved. Trump has long railed against EU tech and antitrust regulation over U.S. tech giants, including Alphabet's Google and Apple Inc. So the European Union is giving Trump what he wants. After months and months of the press running these stories about what an idiot Trump is and how Trump always chickens out and how Trump doesn't know what he's doing and the rest of the world is just going to get together and collectively give him the finger and he's going to look so stupid. Well, here is the European Union terrified of losing access to American markets, eliminating all of their tariffs on U.S. industrial goods in order to get the U.S. to lower, not even eliminate, just lower tariffs on European cars. Don't expect the press to admit they got that one wrong. Also in tariff news this morning, U.S. tariffs rattle Indian exporters, fueling calls for support. Here's the next one that is probably going to bend to some extent and give Trump what he wants. Indian exporters hit by President Trump's 50% tariffs say they can't survive without government support as calls for relief grow. The tariffs, which took effect Wednesday in Washington, doubled the previous 25% duty and are now among the highest in Asia, leaving Indian goods uncompetitive in the U.S. market. Industry groups are pushing for stimulus that includes cheaper loans, wage subsidies, and tax breaks to soften the blow. Without such relief, they warn production will stall, workers could be laid off, and India risks ceding its hard-won market share to rivals. Those with 100% exports to the U.S. markets have laid off laborers in a big way, said S.C. Rowland, president of the Federation of Indian Export Organizations. The government needs to come to our rescue immediately. The U.S. is India's biggest export destination. In 2024, the South Asian nation spent $87.4 billion worth of goods there, about a fifth of the country's total merchandise exports in the year through March of 2025. So Indian exporters are feeling the pain because those tariffs, which were doubled over Russian oil, is effectively a trade embargo. Now that flows right into this next story here. Russian crude exports slide on drone strikes and Trump's tariffs. Shipments have fallen by 600,000 barrels a day over the past 2 weeks. Ukrainian drone strikes on Russia's oil export pipelines and doubling of U.S. tariffs on goods imported from India appear to be hitting Moscow's crude flows. Weekly crude shipments from Russian ports fell by 320,000 barrels a day in the week of August 24th, tanker tracking data compiled by Bloomberg show. Flows dropped to a 4-week low of 2.72 million barrels a day, pushed down by reduced loadings at the Baltic port of Ust-Luga. Did I say that right? I don't know. The drop left 4-week average crude shipments little changed, with seaborne cargoes averaging 3.06 million barrels a day. Separately, President Donald Trump's doubling of U.S. import tariffs on goods from India to 50% imposed because of New Delhi's purchases of Russian oil appears to be hitting the flow of Moscow's crude to the South Asian nation, though it's unclear how long the trend will persist. Shipments heading to India have fallen by more than 500,000 barrels a day over the past 2 months. And even if all the tankers with no confirmed destination all end up discharging at Indian ports, flows would still be down by 300,000 barrels a day, or 17% since late June. The tariff increase could yet be reversed or paused, but refiners are planning to trim purchases of Russian crude in the coming weeks, a modest concession to Washington's pressure, but also a signal that New Delhi doesn't plan to cut ties with Moscow. Nevertheless, Russia sees the discount it offers Indian refiners as big enough to keep them buying its oil. So it hasn't stopped the Russian crude from flowing into India, but it has reduced it by about 18%. And again, about half of that reduction is due to the Ukrainian drone strikes on Russian infrastructure versus just U.S. tariffs. But you can see the tariffs are taking their toll here. All right, shifting gears back to the U.S. here. United Health's ongoing criminal probe is broader than Medicare. The hits just keep on coming for this company. Now, United Health kind of caught a break when we had the 13Fs were released earlier this month, and we found out that Warren Buffett and Michael Burry had all taken stakes in United Health. Well, it's not looking so good for them this morning. The U.S. Justice Department's criminal division is digging into United Health's prescription management services as well as how it reimburses its own doctors under an ongoing probe into the firm's operations, according to people familiar with the matter. The previously unreported areas of the probe show the scrutiny is broader than was known and goes beyond an inquiry into possible Medicare fraud. Investigators are looking into business practices at the company's pharmacy benefits manager, Optum RX, in addition to the physician payments, said the people, who asked not to be identified, discussing a confidential matter. The Justice Department hasn't accused United Health or its executives of wrongdoing, and the existence of a probe doesn't mean that charges will be filed. But the broader scrutiny of United Health's operations and prescription benefits management and doctor reimbursements could complicate the matter for the company. And I think I had something down. No, that was about it for this one. So not just Medicare fraud, possibly PBM problems and doctor reimbursement problems. Again, guys, no charges filed. It's still early on in this, but a lot of problems at United Health. They are not out of the woods yet. And in California this morning, this one's kind of interesting. The Trump administration pulls additional $175 million in funding from California high-speed rail project. I cannot believe California is still playing this silly game with the trains. What a grotesque waste of money this has been for what? Almost 2 decades now. We've been hearing about this magical high-speed rail project that's going to save the climate and save California's economy, and there hasn't been a single train run yet. Transportation Secretary Sean Duffy pulled $175 million from California's high-speed rail project on Tuesday, just a month after canceling $4 billion in federal grants. Duffy cited 4 projects related to the broader California high-speed rail initiative that would lose funding, including track extensions, grade separations, design work, and the construction of a rail station in Madera. Duffy said the full project has thus far incurred $15 billion in costs, calling it a boondoggle. In 20 years, California has not been able to lay a single track of high-speed rail, Duffy said in a statement. The waste ends here. As of today, the American people are done investing in California's failed experiment. Instead, my department will focus on making travel great again by investing in well-managed projects that can make projects like high-speed rail a reality. Of course, California fired back in a statement to CNBC. The California High-Speed Rail Authority said the group moved this week to purchase track components to work toward completion of the high-speed rail within the next year. This is a continuation of the Trump administration's illegal, politically motivated, and baseless attack on California high-speed rail and Central Valley communities, a spokesperson said. The facts are clear. California is delivering the only true high-speed rail system under construction in North America. The project was originally envisioned after a state ballot measure passed in 2008 with the goal of connecting San Francisco and Los Angeles in under 3 hours, but it was later cut down to serve a shorter 170-mile stretch between Merced and Bakersfield. According to the FRA, the current iteration of the plan was projected to cost around $22 billion with an estimated end date of 2033. This is a silly project. It's wasted money. It's never going anywhere. And I'm glad my tax dollars will not be going to it, at least $175 million of it. California is probably going to keep burning their own money for the foreseeable future. And this is a pretty interesting story. Cracker Barrel here has deviated. Look, if you guys haven't been following the story, there was this big backlash on Cracker Barrel over a rebrand. And it honestly, I didn't really see the point of the outrage. It didn't bug me that much. It didn't rise to the level of like a Bud Light or a Disney with their Marvel and Star Wars Mary Sue-isms. But that being said, Cracker Barrel reversed course. That's interesting. When the customer backlash came in, instead of calling their customers racist, misogynist, bigots, and frat bros and all these other things like Disney and Bud Light did, Cracker Barrel reversed course. And the stock is ripping. Pay attention, marketers. Cracker Barrel Old Country Store said it's getting rid of a new logo that had sparked controversy and prompted a slump in its share price. We thank our guests for sharing your voices and love for Cracker Barrel. We said we would listen, and we have, the company said in a statement on Tuesday. Our new logo is going away, and our old-timer will remain. The shares rose as much as 7.4% in U.S. pre-market trading on Wednesday. That's crazy. Just canceling this rebrand rallied the stock 7.5%. Cracker Barrel has faced backlash on social media since changing its vintage logo, by removing an image of a man leaning against a barrel while making the lettering more modern. Critics said the new design strips the chain of its history. Political conservatives, in particular, accused the restaurant of looking to get rid of motifs seen as linked to American culture, which in their view has been under attack. Look, to be honest with you, I didn't quite get the conservative outrage over Cracker Barrel. The stuff with Bud Light and the stuff with Disney made sense to me. I think the Cracker Barrel rebrand was stupid, but it didn't offend me personally. That being said, Cracker Barrel played this right. Instead of doubling down on stupidity and calling their customers racist, bigots, and a-holes and all other things of basket of deplorables type stuff, Cracker Barrel changed course. And look at the stock rip. Let's refresh this, get an accurate mark here, but the stock is up 6%, $61.17 on this reversal. And then, let's look at a 5-day chart here if we can get it. You can see the stock took a dive on this rebrand earlier this week. It went as low as $50, and then this thing is now ripping higher since they reversed the deal. So, pay attention here, guys. When your customers are pissed off when you do something, instead of screaming at your customers and insulting them, maybe hear what they have to say and consider changing your mind. And your stock will be rewarded. Or, you could call them a bunch of frat bros and you could say the force is female, totally destroy decades and century-old IPs, and then wonder why men won't pay to see your movies or drink your beer anymore. Or you could do what Cracker Barrel did. Hey, I just throw them out there. You guys do what you want with them. All right, another one we got to watch here. Kohl's lifts their annual profit target as turnaround gains traction. Kohl's stock is absolutely ripping this morning on this news. Kohl's raised its annual profit forecast on Wednesday as the U.S. department store chain's turnaround reins in costs amid efforts to bring back customers during the key holiday shopping season, sending its shares up 15% in pre-market trading. The company earlier this year closed an e-fulfillment center in Ohio and is downsizing its in-store jewelry business, as well as trimming inventory of its own brands. Kohl's expects annual earnings per share of 50 to 80 cents a share, compared with its earlier range of 10 to 60 cents. So they are dramatically raising the lower end of that earnings spectrum there. The market really liked that raise. We were able to expand our gross margins, reduce our inventory, and lower our expenses, leading to solid second quarter earnings, said interim CEO Michael Bender, who took over after the last CEO had to quit because they found out he was cutting deals with his girlfriend's business. Whoops, little conflict of interest there. Kohl's second quarter adjusted earnings per share of 56 cents handily beat estimates of 29 cents, according to data compiled by LSE&G. But this is the rub here, this bottom line here, the bottom sentence. For the quarter ended August 2nd, comparable sales fell 4.2%, smaller than the estimate of a 5% decline. Okay, maybe that's smaller than expected, and that might be why the stock is ripping, but a comparable sales decline of 4.2%, that sucks. And not included in this article, Kohl's is forecasting a 5 to 7% sales decline for next year. That's not good. All right, so this business is still dying. They're just getting leaner as they're dying, selling off assets, reducing inventory, and that's slowing their burn. So I don't really like the long-term prospects for this company, but short-term, it's hard to argue with the numbers. Look at that move pre-market here, 17.5% higher, $15.33 for Kohl's, up $2.28. Although year-to-date, the stock is, okay, it is now up year-to-date as well. All right, Kohl's turning things around. Is this company going to be around 10 years from now? I don't know. Let me know in the comments. They just shut down the one that was down the street from my house. And last but not least, guys, we got to talk about this one, the M2 money supply. Take a look at this chart and keep in mind, guys, we are on the brink of an easing cycle here. Now, the M2 money supply, this is the total amount of money in savings accounts, checking accounts, CDs, plus cash. This is a measure of broad money in circulation. And obviously, we hit our peak along with the peak of inflation back in 2022 at $22.056 trillion. Then the Fed started down their quantitative tightening road and interest rate hikes, and lending started to dry up. And we had, the bear market of 2022. Big tech was getting bludgeoned, and the money supply started to shrink. That is until 2023 when the banking crisis hit, And of course, shortly after the onset of the AI bubble, we saw the money supply shrinkage start to slow. And then in October of 2023, it reversed. And it's continued and it's accelerated to the upside. Even as the Fed has continued destroying reserves, we have seen private credit and buy now, pay later and margin traders all basically loaning money into existence, even as the Fed has been destroying reserves. And look, if you understand the difference between base money and broad money, as Lynn Alden uses the analogy of the game of musical chairs, when you've got credit expansion as quantitative tightening is going on, that's like adding people, adding players while the Fed is taking away chairs. As long as the music never stops, nobody notices. But when the music stops, there's going to be a lot of people with no chair. That's what this chart is worried about. And look, here we are. We're all sitting here talking about lowering interest rates, about cutting rates, about making it easier to loan money. Asset prices are at all-time highs. Money supply is at all-time highs. Cost of living is at all-time lows. Guys, these things are related. There's a reason for this. The Fed is about to double down on the same stupidity that got us into this mess. But hey, maybe this time will be different, right? To use the age-old adage, I'm sure everything is going to be great. Stop printing so much damn money. That goes for the Fed and for the banks. That's why we can't afford the cost of living. That's why asset prices are high. It's not because the economy is so healthy and everything is thriving. You're just printing money and loaning it into existence. That's the problem. Anyways, hey, as somebody said on Twitter yesterday when I saw a similar story, it said it was something like, step back, folks. Nothing this stupid has ever been tried before. Cutting rates with money supplies at an all-time high. Hey, I just want to say thank you very much to Nashville Pasta Man. Thank you, Nashville, for supporting the channel. He says Central CB based in Nashville is a massive supporter of the Alphabet Pride programs locally, all age parades, etc. Robbie Starbucks, Matt Walsh live here. CB marketing execs are former Nissan marketers. Big cultural story here. Well, I can't speak for the current brands that they're involved with, but what a fine job they did with Nissan, right? It seems like every day Nissan is in the press, just getting bludgeoned. Earlier this week, it was the, who was it? Some pension fund somewhere. Mercedes-Benz pension fund was dumping Nissan stock. Nissan is trying to sell factories in the U.S. They're shutting down production. The tariffs on Japanese autos is probably going to be the last nail in their coffin. So, hey, these marketers, if you like what they did with Nissan, sure, go ahead and sign up your brand with that. Look, guys, the whole culture war thing, tying your brand to that is not a recipe for success. It just isn't. You don't have to pick a side in a culture war if you're a business. I guess that's the message nobody is getting, right? You can sell to both. You don't have to take a side. You're either for us or against us. False binary demands, right? That's not how this is supposed to work. And look at what has happened to the brands that have taken a side. They've been bludgeoned because when you take a side, the other side isn't going to buy your stuff. Case in point, Star Wars. Disney figured out how to lose money with Star Wars. Take a second and think about that and what that really means, how profound that is. I mean, they made fun of what a cash cow Star Wars was. Remember Spaceballs, the flamethrower, merchandising, Spaceballs, the lunchbox. The kids love it. All that stuff, that was poking fun at how easy it is to make money by slapping Star Wars on anything. Of course, that was back in the 1980s before Disney bought Lucasfilm and then turned it into a messaging center instead of an entertainment IP. And they did the same thing with Marvel. Robert Downey Jr. and what he did with Iron Man turned Marvel into a freaking money printing press. But then Disney had to ram their political ideology down the throats of audiences. And of course, the MCU turned into the MCU. And now, go figure, boys don't want to spend money on Star Wars and Marvel. And it turns out the female market for Star Wars and comic books was never really that big. Somebody didn't do their marketing research. Girls don't buy comic books and girls don't buy Star Wars stuff. Did you really need, I could turn the camera around. I could show you shelf after shelf of Star Wars shit on my wall, but it was all made before Disney bought the company. And you got my man Darth hanging out in the background here. I freaking love Star Wars. I built my childhood around it. Oh, but, Kathleen Kennedy says I'm this like racist bigot and everything. Why? Because, I don't know, because I suddenly can't stand a strong female character. Okay, I didn't have a problem with Princess Leia and her uncanny marksmanship. No, the problem is your storytelling sucks. You're prioritizing messaging over story, and that's going to destroy your brand. See also Bud Light. See also what almost happened to Cracker Barrel, but they saved it in time. So, like, you don't have to tie your brand to your stupid politics. Check that shit at the door when you go into work. Why is that so hard? I don't know. Thank you, Pasta Man, for supporting the channel. Appreciate the super chat, sir. Chris Bott says, my first tech job was for an ISP in the late 90s. They built a data center 10 years too early and went bankrupt. Yeah, that's what happened in the dot-com bubble. They built out the infrastructure first. There was no demand for it. There was no profit, and they all went belly up. The internet survived, but it wasn't the data center build out that made money. Data centers are expensive to build and even more expensive to maintain. Mission, Chris, that's great comment, by the way. And Mish and I were talking about this in our morning discussion that we have before every live stream, talking about how, the big infrastructure build out, everybody thought it was laying the fiber cable and building the server farms. That's where the money was going to be made in the internet. And yeah, don't worry, just throw a banner on your website, phase 3 profit. It didn't work. All right. They all went belly up. They all failed. Actually, the companies that ended up making money, it turns out it was the data. It was the information that was really worth so much money. It wasn't the infrastructure build out. It wasn't the advertising. It was the information about the people you're marketing to. That was the commodity. And so it took about another 10, 15 years for the profitability to emerge. I don't know what the final iteration of AI or what AI is going to look like 10, 15 years from now, but it sure as heck isn't going to be these stupid chatbots that are telling us to glue pizzas together, convincing people to unalive themselves. By the way, there's another story about another family suing OpenAI because ChatGPT convinced their son to unalive himself. And even when the son was talking about like a cry for help to maybe get family to convince him to stop, ChatGPT talked him out of it and ultimately helped convince him. Horrible stories. And it's not the first time. We've seen a handful of stories like this. Guys, 95% of these AI pilots in corporate America are failing. We saw that story in the Wall Street Journal. It's not making anyone any money except Nvidia. And at the end of the day, if Nvidia's customers ain't making Nvidia, or if Nvidia's customers are not making money, how much longer can they remain Nvidia customers? The second that investor capital dries up, this whole bubble pops. Is that going to happen this afternoon? Probably not, but it's coming. They built too much. They built too fast. The hype machine had to go, inflate the bubble, inflate the stock, too much investor capital flowing around. And ultimately, I think they're going to try to park a lot of this crap in 401ks. We saw the article earlier this week about $50 billion in private credit flowing into data centers. You better believe that's going to make its way into ETFs and mutual funds and target date retirement funds that are all going to go belly up. So, does that all come to a head today? Probably not. But thank you, Chris. I agree with your sentiment. And Mechanical Jesus, okay, wind him up and let him go. Thank you, Mechanical Jesus. He says, good morning. Good morning to you as well. Thank you for supporting the channel. I appreciate that very much. And thank you, everybody, for having your coffee with the melon heads. It's going to be a big afternoon and probably a big morning tomorrow. I don't know which way it goes. Probably a big beat. Will it be big enough? Only time will tell. Thank you so much for watching. Thank you, guys, for the super chats. Thank you to my magnanimous melon heads on YouTube and Patreon. Thank you guys for supporting the channel. Links down below should you feel so inclined. Don't forget that like button and that subscribe button on the way out. Hi, Mom. Hi, Dad. Love you guys, everybody. Till tomorrow. Live small and dream big.